think the central bank buying is a function of the deteriorating strength of the US dollar. I think the immediate cause of the gold price increase is central bank buying, but I think it's important to understand why central banks are buying in favor of instruments that they had preferred over 40 years to gold. And that is, first of all, the weaponization of the US dollar, the realization by foreign central banks that the United States dollar isn't a neutral medium of exchange. The United States has politicized the dollar, which has in some senses forced foreign central banks to buy a medium of exchange that is also a better store of value. And the store of value is also, I think, problematic. When foreign central banks and large family offices, as an example, look at the encumbrances of the U.S. society, the $36 trillion in on-balance sheet debt and the $100 trillion in net present value of unfunded promises, Medicare, Medicaid, Social Security, and the foreign central banks juxtapose the yield on the U.S. 10-year Treasury with the deteriorating purchasing power of the U.S. dollar. In addition to the dollar being risky because of politics, it's also risky because of economics. So for those two reasons, we've seen really since 2022 concerted central bank buying of gold and disintermediation out of the U.S. Treasury, which has led to, I would argue, higher nominal, all-time high nominal gold prices. If you adjust the $3,000 gold price for the deteriorating purchasing power of the dollar, it's arguable that we aren't at all-time highs. It's arguable that we have further, perhaps substantially further, to rise. I informally advise 4 U.S. and 2 non-U.S. family offices. And traditionally, those family offices were attracted to me because of my knowledge of oil and gas, or perhaps mining. And traditionally, those family offices, in terms of their predominant investing activity, has been global real estate. All 6 family offices, when I talk to them, talk to me about gold now. It's very interesting. Now, in fairness, I've been talking to them about gold for a decade. And in each case, I managed to get these family offices to put in place a physical allocation, or at least a proxy physical allocation, like the Sprott Physical Gold Trust. But in every case now, the circumstances that led to our discussions a decade ago, or sometimes 2 decades ago, have manifest themselves in very concerted family interest in gold. And I'm fairly certain, given the opportunities that I'm offered to speak at family office conferences around the world, that the 6 family offices that I advise aren't unique in this regard. But in every case, I think their belief is similar to mine, in the sense that we've passed through 40 very benign years in investing history, the period 1982 to 2022. Declining real interest rates, US dollar hegemony, increasing global trade, better demographics on a global basis. And I'm not trying to say the world's going to come to an end, but the next 10 years are going to be more challenging than the last 40. The consequence of that is that many, many investors, from foreign central banks through offices all the way to Moz and Paws, have decided that having part of their wealth in an insurance asset, gold, maintaining purchasing power, is an important thing to do. The world, I think, is becoming more defensive. And I would argue that for at least 1,000 years, the most defensive investment available to humankind has been gold. I believe that within 2 years, perhaps 5, but within 2 years, that there will be one or more broadly utilized gold tokens, gold trading on the distributed ledger. That, well, when I say gold, a deposit receipt, redeemable, and fully backed by gold. The World Gold Council is trying to affect this. The London bullion market is trying to affect this. I've made some investments. Sprott has made some investments. There are a variety of technologies around, first of all, establishing a deposit receipt that is recorded, entered, and transferred on the blockchain, and then tokenizing that. And I would expect that within 2, but certainly within 5, you will be able to have either a credit or a debit card in your wallet that allows you to save in gold, receive interest in gold, and transact in gold. This will likely be a private currency, like blockchain is, not a government-sanctioned money. But I think it's all a good thing. I think the establishment of the psychological infrastructure around blockchain implemented transactions has allowed for gold to return to its former role. You can, in many countries, and I have, used gold as a medium of exchange. But the transaction costs are very, very, very high, among other reasons, because people need to assay the gold that they receive or pay. If you had London bullion market and World Gold Council certified storage facility where you knew that the gold in place was good delivery, good system delivery, and you knew that the token was fully backed by gold, you could lower your transaction costs substantially, just the same way that the hard transaction costs around cryptocurrencies are very, very low. I think that's just a really, really, really important development. And I think we're 2 to 5 years away from that. There will always be, and there is a place for, holders of physical gold and silver to have it outside of the blockchain, outside of the system. Because understand that the system is the system. This will be part of the global financial system. It will be within reach of governments. It will be within reach of institutional failure. So I'm not trying to suggest that blockchain denominated delivery receipts will replace physical private ownership for gold or silver. I am merely suggesting that in addition to gold fulfilling that role, and in addition to gold fulfilling a role for central banks, that it will, in answer to your question, once again become a medium of exchange rather than merely a store of value. I'm attracted to the nickel market, particularly because so many people hate it. There has been a real supply surge in nickel, largely from Indonesia, but also from the Philippines. And this is nickel that is produced from lateritic surface ores. And you're in the part of the world where that's happening. The environmental devastation that's taking place, particularly in Indonesia, particularly in southern Sulawesi, is mind-boggling. I flew over this some months ago. And my suspicion is that the growth in lateritic nickel production, and particularly low-cost lateritic nickel production, will begin to decline as neither the Indonesian citizenry nor the Indonesian government, I think, will be willing for much longer to tolerate the environmental destruction that's happening as a consequence of this lateritic nickel production. If that happens, I think it's when, not if, but if it happens, the cost of producing lateritic nickels goes up immediately, and I suspect makes the traditional sulfide nickel much more economic. In addition, of course, to nickel's use in battery, it needs to be remembered that the primary use of nickel is an alloy in steel manufacturing and other forms of metallurgy. And the urbanization of emerging markets' populations will also generate growth for the nickel. That the natural resource bull market that we enjoyed in the period 2000 to 2010 was largely a function of the urbanization of 500 million people in China. That process continues, albeit not as much in China, although China does have, they estimate, 100 million more people to urbanize. But it's taking place in Indonesia, it's taking place in India, it's taking place in Malawi, it's taking place in Brazil. There's 1 billion people on Earth, Patrick, with no access to primary electricity, as an example. Over the next 20 or 25 years, we deal with that. And all of the benefits of urbanization and electrification will flow through to a billion extraordinarily poor people. And I think that we'll see a boom in the material standard of living of humankind. And that will include, importantly, nickel. These people will want refrigerators, they'll want washing machines, they'll want automobiles, they'll want all kinds of things that are made with specialty steels, as an example. They will want to use electricity on a distributed fashion, which is to say batteries. All that is about nickel. All that is about copper. All that is about rare earths. All that is about industrial materials. I own some platinum just because on a global basis, the cost to produce platinum is higher than the selling price, which is to say the industry is in liquidation. Platinum is produced really three places, South Africa and Russia primarily, to a lesser degree in Zimbabwe. So there are political risks around platinum. If you had real ongoing political disruption or social disruption in any of those places, platinum supply would fall precipitously, but platinum demand wouldn't fall at all. One of the reasons why the platinum futures price has been so soft is because the big thinkers in the world have suggested that we've seen the end or the beginning of the end of the internal combustion engine. Platinum, of course, is used as an auto catalyst to reduce smog from automobiles, among other uses. I believe that the internal combustion engine reaches its hiatus in 2060 or 2065, not 2030. So I believe that auto catalyst demand for platinum continues for at least 35 or 40 years. The consequence of that is that I think that the platinum prices recover at least to the point that the industry covers its cost of capital. But if you had broad spread social disruption in either Russia or South Africa, I'm not saying that you will, but if you did, I think you'd see the platinum price rebound very, very, very quickly. I will point out to you, too, that one of the reasons I think that platinum has been so soft in the last 3 years is that one of the big producers, Russia, has had a real incentive to sell it because they need the money. We saw this in 1990 or 1991, the last time Russia ran out of money. They cleaned out the cupboards of everything that they had that had a bid, including platinum and nickel. My suspicion is, and I don't know this to be true, my suspicion is that Russia's needs for money in the last 3 years have been such that they probably have not been making sustaining capital investments at places like Norilsk, the biggest single source of platinum and nickel in the world. If that's true, that will reduce structurally their ability to produce platinum and nickel for as much as 5 years after the eventual cessation of hostilities in the Ukraine.